Good morning and happy new year. Today is the last trading day of the New York Stock Exchange. The market, it's been interesting over the years. I'm looking at my stock almanac. Now, this is one of my favorite things. I think I've shared it with you guys. The Stock Traders Almanac for 2023. This is a book that's published by Wiley, Jeffrey Hirsch, and Christopher Mistel. If I remember right, Jeffrey's dad started this. But anyway, I just really enjoy the Stock Traders Almanac. And today, when I was looking at the Stock Traders Almanac, it's interesting. It says the last trading day of the year, the NASDAQ has been down 16 of the last 22 years. Now, on the bullish side, the NASDAQ was up 29 years in a row on this last day of the year from 1971 to 1999. Who knows? Who knows what today will bring in the stock market, but I am glad you're here. I'm Doug Shreve. Welcome from Gimbal Financial, from Keith Tyner, Libby, Amanda, Phil. We are here to serve you guys and just want to walk through a recap of what we've been experiencing this year and then looking forward to next year. As you can see, we've got our safety disclaimers up here. You've probably had a chance to read that, and so I'm going to go ahead and click that off. But it's really good to have you here today. I am so thankful for you all. I'm thankful for our team. We've had a very good year. One of the highlights of this year was we hired a business consultant. His name's Wes. And Wes came in and did a team meeting with us on the values that we each bring to the table. And Amanda, Libby, Keith, Phil, they bring different stuff than I've got. And it's been so enjoyable to see our team communicate better and to grow and to take ownership in what we're doing. And so I'm excited to look into 2024 and experience that with you all. So some of the challenges that we saw in 2023, as I was thinking this morning, were pretty interesting. Do you remember the Zoom call that we had when we were talking about potential bank challenges? Silicon Valley Bank. That was the bank where several tech firms had money, and they had made a bet on Treasury yields that went the wrong way, and that really surprised and hurt them. And so interest rates have been a topic of discussion all year long. And we've seen rates steadily increasing. And then come right around the 1st of November, we got hints of pauses, and that sent the market into optimism again. Prior to that, July through really that first week of October was just super difficult. It reminded me of a year that we had a few years ago, 2018, if I remember right, where the market in January just took a nosedive and then V'd up and rallied back in February. And so we're going to have experiences like that. No one can really get ahead of it. You know, everyone say, hey, what do you think the stock market's going to do? Or I'm sure that's the talk on TV shows today. What is the stock market going to do in 2024? The stock market is the indicator. And when I say the stock market, I'm talking about the indices that we take a look at on this show. The stock market is a leading indicator for the economy. It's trying to get ahead 18 to 24 months and say, this is what we think might happen in the future. And so when you think about the stock market, just know that it's the indicator to pay attention to. So what will happen? No one knows, but we can pay attention to what's going on in the stock market, and that's what we do. So I want to go ahead and share a screen with you guys, and we'll take a look at the markets. And I'm going to start this off with a screen that you're familiar with, that you've seen a couple times. And this is the Investors Advisor Bullish chart. It's basically a questionnaire that goes out to several investment advisors like myself, and we get the opportunity to vote whether we think the market's going to be up in the next 6 months, if it's going to be level, or if it's going to be down. And as you can see, and some of you remember, the market started to hit some new highs right around Black Friday 2021. So that would have been right in here. Changed my pin. There we go. And you can see 57% of the investors surveyed thought the market would be up the next 6 months. Isn't that interesting? Because what did it do? 2022 was just brutal, is brutally tough. I mean, the whole year was really tough. And so then we come down here to September 2022, and the survey is 25% of advisors think the next 6 months would be up. And so many were bearish. Well, what did the market do? It's run up. So this is a contrarian type indicator. And as you can see, we are approaching highs again, levels of optimism. Does that mean the market's going to go up or down? It's hard to know, but the bulls are definitely coming in. And so that tends to tell me that this run that we've had in the stock market has been pretty good. And I wouldn't be surprised to see if we wouldn't have a bit of a sell-off, or just maybe even going sideways. So let's take a look and see what we're exploring in the markets. Here is the Dow Jones Industrial Average. This is 30 stocks, and we're going to take a look at this here in a little bit. But the Dow Jones has just been looking fantastic. And not only do we have just great price accumulation, this is a weekly chart. And so each bar right here represents 1 week. It's a lot of weeks. And so we've got just great price accumulation in the Dow Jones. We also have really good volume participation, meaning that there's been buyers coming in. So how do I know that? The blue bars equal buyers. And again, these are weeks, and the red bars are sellers. When the bar goes above this horizontal red line, it's probably hard to see on your monitor, but when it goes above that, that tells us there's above average volume coming in. And so the buyers have been just pouring in since November, and that's been good to see. Take a look at the let's look at the S&P 500. This is the S&P 500, similar story, really, since that first week in November. We've started to see price accumulation. We see volume accumulation on the buy side. Again, same story. It's been looking very good. The prices right now are way north of their 200-day moving average. If you can see this on the very bottom of that little box that pulled up, it'll say SMA 40. That's the 200-day. And so we're about 10% north of the 200-day moving average. That's been good to see. Take a look at the NASDAQ. The NASDAQ, this is going to be more growth-oriented companies, companies that are not necessarily paying dividends, companies that are pouring money back into research, development, new products, new services. And you can see, again, similar story. We've got good price accumulation, got good volume coming in. If we look back, this is the high. See that horizontal line I just drew? That would have been back around that Black Friday time period in 2021. So we still have a ways to go to get there, but the market has been moving in that direction. Again, I wouldn't be surprised to see a little pullback here, or if this thing could just kind of go slightly down to sideways, that would be encouraging to me. That would tell me that investors are letting this digest and they're not taking quick profits. Moving on to the Russell 2000. The Russell 2000, this is small caps. I think we like to highlight the S&P 400. Same thing, different flavor, or similar flavor, I'm sorry. But this is small to medium-sized companies, so they're not going to be behemoth companies like you're going to see on the Dow Jones. These are the smaller ones. And it's had a great move up. We were waiting on this. This was the last index of the ones that we highlight to really move beyond its 200-day. And that's been encouraging. Still has a little ways to go, catch up to its high, but we're getting there. Again, if I, in my dream world, this thing would just kind of go sideways for a little bit and digest. Even if it goes down a little bit, that'd be okay. But that's what we're looking at when we're looking at the small to mid-sized companies. Now, this is, I think, been one of the most interesting stories of this year, and I'm going to switch this to a daily. Okay, so have you all heard of a balanced fund, a balanced mutual fund? Maybe you had one in your 401k when you were working, or maybe you have one in your 401k right now. Several 401ks offer a balanced fund, and a balanced fund it's like a combination of stocks and bonds. It might be 50-50. Some balanced funds can fluctuate. Maybe it's 70% stocks, 30% bonds. But a balanced fund is going to have some combination of stocks or equities and fixed income assets like bonds. And I bring this up because it's been very interesting to see what's going on with bonds lately. The money market rates have still held up, and they're based on shorter term yields. And so this is a 13-week Treasury yield index. This measures short term, 1 year, or less than a year type fixed income paper. So this stuff's coming due all the time, okay? And it's paying 5.2%. So if you were to look at your money market fund, your money market fund could be somewhere around here, maybe 5%. I know I went to my bank the other day and I said, "Hey, what's your money market paying?" And they told me they had one that was paying around 4. So maybe you're around 4. But point is, it's going to be pretty decent compared to where we were in 2020, 21, 22. Things really started to tick up in, oh goodness, maybe late summer 2022. Money market yields started to really pick up. So this is what money markets are paying right now in the short term. But if we go out to 5 years, look at this. This is a 5-year Treasury index. They were, what the high hit 4.9% right here. And now it's at 3.8. What does that tell you? That tells you that folks believe that the money markets or the fixed income assets, as we go out in time, won't pay as much. And so if you are looking to do something longer term, the yields have really dropped off. And that's not necessarily a bad thing. We've seen how that's been good for the stock market. Money has been shifting over into the stock market. But as we go out even longer, this would be a 10-year, 3.8, similar to the 5-year. And so if you had a balanced fund, a balanced portfolio, you've seen yields kind of go all over the place, and it's been choppy. So that's just a quick look at what's going on in the stock market. Again, the market itself, here's the S&P 500 index, kind of looks like the opposite of the bonds. The S&P 500 index has just been looking fantastic. Okay. Something I thought we could talk about is looking under the hood of your investments and knowing what you own. I want to thank David Malik for helping me understand that. David Malik is a financial advisor out on the East Coast. He works for a gigantic firm. He's also an author. He's written a couple fiction books, but they are great storytellers. He's a great storyteller about the stock market, and I want to thank him for helping me understand. And so when you look at the stock index like an S&P 500 or a Dow Jones or a NASDAQ, it's important to know how things are priced and what's under the hood. So I thought I'd share what that looks like. Okay, So this is the Dow Jones. You all see that? Move my bar here. And you can find this stuff's easily available if you do a Google search. I think this was the first thing that popped up. It's on slickcharts.com. And so this is a component of the Dow Jones. And the way the Dow Jones handles things or ranks things is it's pretty interesting. It's price weighted. And so if a stock has a high price per share, it's going to be weighted more than a stock that has a low price. So United Healthcare Group has a stock price of $525 per share. Well, it makes up 9% of the Dow Jones. Goldman Sachs has a price of 386. It makes up nearly 7%. If I scroll down, Walgreens at the bottom here has a price of $26. It makes up a 0.5%. So even though there are 30 companies inside the Dow Jones, the weightings are not equal. Johnson and Johnson does not have as much impact as Salesforce has, okay, or Home Depot has. Kind of interesting. If we look at the S&P 500, here's the S&P 500. And one of the questions that I love to get from time to time is someone will call in and say, "Hey, Doug, what would you think about buying Apple? I would like to own Apple." And oftentimes, my reply is, "Hey, what if I told you you already own it?" I do? Where? Well, in the index. And how much of it do you own? Check this out. This is really interesting. And so, whereas the Dow Jones was price weighted, the S&P 500 is market capitalization weighted. So, as you can see, Apple is big. Look at that, number one, 7%. Well, what is market capitalization weighted? What does that even mean? The way that market capitalization is factored is you take the stock price and you multiply that by the number of shares. And so in this example, you take the price of Apple, that 193.49, and multiply it by the number of shares that are out there. And then it's divided by the index total market cap. So that's how the weightings take place in the S&P 500. And this is really important to know because when you look under the hood, you get to see exactly what you own. See this one down here, Berkshire Hathaway. And we're not recommending any of these. I want you to understand that looking under the hood to see what you own is very important. So Berkshire Hathaway, it's 1.5% of the S&P 500, where Microsoft's nearly 7%. And so as these stocks go, so does the price of the index. And the big influencers, look at this. These are those big tech names that we talk about all the time. The NASDAQ is very similar. The NASDAQ is a market cap weighted index. And you can see Apple, it's huge. It's at the top. Microsoft, several of these. And then if you keep, there's tons of these. There's like, this one's based on the NASDAQ 100, but you can see there's smaller weightings down here. Marriott, 0.5%. Lululemon, did you get any yoga pants for Christmas? This is weighted 0.5%. And so it's just interesting to me that when you look under the hood of your investments, you can actually see the stocks that you own. And it is such a beautiful thing to be able to have ownership in our society. We take that for granted. You own several things. Maybe it's your car, maybe it's your house, maybe it's your bicycle or whatever you enjoy doing, your hobby. You enjoy that equipment, but you also are owners of businesses. And it was sometime this year I was at home and I told the boys, I said, "Hey, we own Tesla, guys. We own Tesla." And and when you see one drive by, just know that your family owns that company. And one of the littler boys, he's like, "Hey, Dad, wouldn't you rather just own a real Tesla so we could ride in it? And I thought that was so funny. No, I'd rather own the stock. I'd rather own the stock. That might allow us to own a Tesla and drive it around someday. But anyway, stock ownership, what's under the hood of these indexes is really important. It's important to know. I was talking with Keith this morning, and Keith, here's the question Keith wondered for you. I'll go ahead and pull it up. He says, if you had a habit for which you were compelled to make for a New Year's resolution, what would that be? And then if you had a vision of what that would be, or maybe an event that you wanted to do, or a place you wanted to see, what would be the first step towards making that a reality? What are some baby steps that you could take? And in Keith's example, and I don't know if he's thinking this or not. You guys have to reach out to him and find out. But his example was a marathon. And what if you said, look, I want to run a marathon by the end of March? What would that look like? What would you need to do to run a marathon by the end of the March? Well, you might need to get some running shoes, or if you're living in Indiana, uh, some tights. Go to Lululemon, get yourself some expensive tights. Um, you might start reading or asking other people, hey, what was it about a marathon that inspired you? What do I need to be ready for? What type of stretches do I need to do? What do I need to do with my nutrition, my diet? And can you imagine being able to say, hey, I aimed for this. I journeyed through it. The result was this. Whatever the result is, cool. But the journey towards it or through it, that's where the joy is. That's where the satisfaction is. And yesterday I had a just a really great experience. I drove to Paducah, Kentucky yesterday. 5 hours there, 5 hours back. It was a long day. I had about a 2 hour meeting in between, and it was such a joy. I met with about a dozen people, and the majority of these people were brand new investors. Do you remember your first investment? It could have been a stock. I think the first stock I ever bought was Abercrombie and Fitch, like in 1998 or something like that. Um, was it a 401k investment? Did your company that you worked for make that investment for you, or did you do it yourself? When I met with these people, several of them, this was their first time investing. And I was so excited to be a part of that journey with them. We didn't really talk about the destination of, hey, what's this going to turn into? Where will it go? What will I use it for? Instead, we talked about just getting started. How do you get started? In getting started, that's the defining moment. Getting started in something that's bigger than where you are right now, and probably bigger than you could ever dream. And so that's the idea behind the discussion Keith and I were having is what is something that you could look forward to in 2024. And I think I would encourage you to think courageously on that. What is something that you need to take courage in that's bigger than yourself? When I think about that stuff, it's relationships, it's the timeless things, the eternal things, relationships. Who in your life could you have an adventure with? Who in your life do you need to say sorry to? Who in your life could you just enjoy or learn something new? What might you do to become a healthier version of you in 2024? That could be a journey. And that could be something that just feels great. Can you imagine aging but being healthier than you are today? Heck yeah. Heck yeah, you could do that. Um, Maybe it's you go for something where you can learn something new, a new skill set. I think back to my boys, they did scouting for a little while. We were not very good Boy Scouts. I think Keith's an Eagle Scout, but we were not very good Boy Scouts. But we did get the knife patch or the oh goodness, what's it called? The whittling patch or something like that. And so my boys got to learn how to use knives safely. I mean, that's a pretty cool skill set. Maybe there's something you can learn. Maybe you can ask someone, hey, what do you like about this? Can some of that rub off on me? I really appreciate every one of you walking through these calls with us. And I hope you're learning something about the stock market. I hope you're learning something about how this world works, how capitalism works. And you're a big part of capitalism, whether you're creating, spending, whatever you're doing, you're a huge part of it. And you're a huge part to Gimbal Financial. I really want to thank you for that. I want to thank Keith for setting the tone through the mission statement here and setting the vision. And Phil joined us this year. Phil's been a great addition. Libby joined us this year. Amanda's been with us. Debbie's still been with us. She comes in the office and helps clean the office. So whenever you come here, it'll be spotless because of Debbie. But guys, it's just been wonderful. And I can't wait to do 2024 with you. Happy New Year.